Let me quickly do some introductions. We have on screen at the moment everybody or most of the people, not everybody, at Travlaw at the moment. So we have Natalie, Gemma, Stephen, Rivka, Kate, Katie, Sophie, Emma, David, Nick, and Christine. So if you could all say hello and then put yourselves onto mute and to remove your video, that would be fantastic. Thank you, Team Travlaw. And without further ado, let me move on to the main event. I'd like to introduce, and we're very pleased to have these three here with us today. You will know them already, I dare say, but some introductions are required. We have Alan Pattison, who is the MD of Travel Risk Professionals. We have Chris Photi, who is the head of Travel and Leisure at Hart Associates, and we have Mike Saul, who is head of Hospitality and Leisure at Barclays. Thank you, all three of you, for joining this morning. What we'll do then is we'll get straight into it. We asked if all of you could perhaps just speak for 10 minutes on issues which are relevant to the travel and leisure industry, as you see them from where you sit. So maybe if I asked Mike, if you could kindly kick us off for the day. Mike Saul from Barclays. Go for it, Mike.
Thanks, Matt, and good morning, everybody. So Mike Saul, I look after the broader church, which is hospitality and leisure. So that is anything from pubs, clubs, restaurants, hotels, travel companies, sports bodies. As you can imagine, the whole sector has been absolutely decimated. So to the extent that everything is discretionary spend, UK travel or overseas travel, it really has hit things hard. Our spending tracker that we use via Barclays card shows that everything is down significantly, between 70 and 95% across the different subsectors within leisure. So it is no surprise when people are not able to travel and there is no clear guidelines about when the business models might be stood back up again. It has been quite a turbulent time. So my team have been working very closely with their clients. Lots of dialogue, lots of no surprise approach to the way that we deal with the coming back to life and actually the survival stage. So at the moment where we are, we have all the government government support schemes from a loan perspective pretty well known, anything from the £50,000 bounce back loan right up to the commercial paper. I think each different government scheme has been stood up extremely quickly. So to the extent that a business does need some support, we have to look at eligibility and we have to look at viability. And so effectively, it's like everything else. If the business simply couldn't have afforded it at the tail end of last year, it's highly unlikely that business would make a lot of sense for them to have lots of leverage going forward. So there are some quite tough decisions to be made. And that's why I think it's quite important to have this regular contact, little and often, with your finance supplier, with your card company, with the regulators, and this no surprise mentality. Everybody's learning from each other's experiences. So we are starting to see some business coming back to normal, but the fundamental issue that a lot of our dialogue with our clients revolves around is consumer confidence. What is it that will take the business model forward? How will people feel comfortable to make that booking? There are a lot of people sat on their hands waiting. There are a lot of people looking at alternatives to overseas travel. So our for example, the caravan park sector that we look at, lodges, cottages, if you try to book something for the summer now, I would pretty much guarantee that you're not going to get anything for the month of August. A lot of that has been taken up. And that is because people have this insatiable desire, and it's a necessary need, well-being and everything else incorporated, for a break. And the default has been to look at the staycation model. That is something that in the longer term will be replaced, I'm sure, back with corporate travel coming back reasonably strongly. Although certainly there is a lot of pent-up demand for people to take the holidays. So a lot of the dynamics that we're seeing, and when we look at the spend patterns in travel agents and airlines, as I say, the month of June figures were down on average between 85 and 90% based on the previous month. I mean, in terms of what some of our customers are telling us, there was a perfect storm, or there was a perfect business scenario towards the end of Q4 last year. The demise of Thomas Cook and the rethink of the business or the industry as a whole more seats being made available. I think it's probably fair to say that a lot of customers were banking on better margins. So whereas margins have typically been very, very skinny, in a situation such as this pandemic, then those skinny margins have effectively made it very difficult for some companies to see their way through this pause period. And we will see even more business dynamics suffering as a result of coming out of the other side. So in previous recessions, we've seen many, many businesses failing on the emergence from a recession. The shape of this recession, everybody talks about a V shape or a U shape. I quite like the idea of a reverse tick, which is the steep decline, and there will be a relatively modest increase back to normality. I don't think it's going to get to a full V shape for a while, hence why the reverse tick mentality gives a picture for the more immediate future, and that's some of the planning that we're having with our customers. So it's about looking at the business viability, the sort of cost structures. If you are entering into a government scheme, one of the things that particularly with the PLCs, if they're entering into a commercial paper type situation, it means that dividends are on pause, directors' remuneration is on pause. So there are different benefits to look at in terms of the type of scheme that you may or may not go into. Equally, what I would say is that we have a significant wall of liquidity across our book. So a lot of businesses, not everybody is needing to borrow is what I'm trying to say. However, when you start to come out of furlough, or you start to trade up, the costs are going to mount significantly. So we do need to have this understanding of exactly what your business model looks like. I think most customers are now talking positive contribution. So what I'm talking about there is revenue exceeding the variable costs to get a positive contribution, rather than it being net refunds or vouchers being issued or costs going out the door with no trade coming in. We are now starting to see booking patterns starting to return. It's fair to say that a lot of people seem to be just looking around to get ideas as opposed to firm bookings. I do worry about the extreme, which would be if a vaccine was introduced tomorrow. Would that be an explosion of people wanting to travel? But the vaccine in and of itself is one of those confidence factors that we are looking to try and see operators work with clients in a positive way. So it could be vaccine, it could be talking about COVID insurance, it could be about sharing through social media some of the good stories about the flights that are now taking place and dissipating some of that fear that's out there. What we have seen is a significant shift to a new distribution model. More and more clients are now, there's a significant increase in digital and online solutions. So I think one of the other points that we'll be talking about is landlords and the estate, and whether or not that distribution cost, the traditional retail outlets, will be as prevalent going forward. This is an opportunity for businesses to redesign their business model. It is incredibly unfortunate, but there is going to be a shift around of resources that could lead to some employment, a change in the home working patterns. There are other things that we're talking about with our clients. And at the end of all of this, when business is back in trading, some of these delayed rents, rates, loans that have been drawn, they all need to be paid back. So we are looking at the longer term business plans with our clients as well. And of course, that involves keeping the regulators advised of any extra debts that's taken on. I think it does need to be a tag team between the regulators, the banks, and you, the operators. Obviously, solvency is something that directors have been given a little bit more discretion around at the moment. But once we get back to full trading, then I guess we're going to have to be looking at the regular canons of lending. I think from a credit card landscape, just conscious of time, from a credit card landscape, it is quite difficult at the moment for them to take a view. And when we hear Alan talking after me, the landscape of this bonds being provided, insurance being provided, credit card lines being made available for the new trading entities, there is a desire where possible to look towards security, because it is, with any bank, with any card issuer, it is still a high risk sector. So until those trading patterns are established, we have to balance the demand of the growing business coming back to life versus the risk mitigation that most institutions will look to achieve. So I think the vouchers being underwritten is going to help, but fundamentally that has to work its way through the cash flow. from an operator perspective, if you can use CRM tools to understand some of the behaviors of your customers, the cost of acquisition of new customers being reduced because you can market to them in a more positive way, technology is going to have a huge part to play in the recovery of the sector. And so all of these are different areas that we talk to our clients about, and it is quite a wide and varied experience. I think there is a need to just be very alert to what the FCO are doing, and that would be part and parcel of any risk that we are discussing with clients. And I think the other thing as well, just on a final point really, would be around keeping in touch with your team. It is very difficult to maintain home working and to bring a lot of change, particularly quickly. And the cost structure is so important when it comes to the return on investment. If there is a whole stream reinvestment in IT, for example, but that payback period and that changing in their business model is something that we look at it from a regular cash flow basis, terms of trade with the clients, force majeure conversations, supplier conversations. Everybody's in this together, and we do look at it as a joined up approach when we're talking to clients about their business outlook and the way they're planning to move things forward. So I'll stop at that point, Matt, and hand back to you.
Thanks, Mike. Really insightful, and you know, just from that brief kind of 10 minutes or so, it's clear that there are so many things going on. So it is very difficult to kind of cover just the wide array of issues that we're all seeing as an industry. Alan, I'll ask you to come up next if that's okay. And I know you've got a couple of slides to put up, so they're being put up now. Excellent, thank you, Dave. Alan.
Morning, everyone. So what a difference a few months makes. 6 months ago, we'd just finished the Big Tent event. From my recollection, I don't think coronavirus or COVID raised too much of a murmur at the time. I went away shortly afterwards, a skiing holiday in Italy. Had a fantastic time. Best holiday I've ever had. All the restaurants were full, hotels were full, ski slopes were open. In short, it was normal. I came back following day, looked on the TV, turned out I was on holiday in the epicenter of the European outbreak of coronavirus. You wouldn't have known. It was quite a surreal experience, and since then we've seen a decline into chaos and financial instability across the market. And this brings us to a whole new landscape. It's been tough for many sectors. The travel sector, one of the biggest hit. And what I want to do today, just very briefly, is to outline some useful steps I think that tour operators can start thinking about in terms of re-establishing bookings and tours going forward. And just to share some thoughts on risk and risk management, new approaches, etc. Obviously, if anyone's got any insurance-related questions, I'll do my very best to answer them at the end of the session. But if I could have the next slide, if possible. Is there somewhere? Ah, there we go. Yes, so as I said, we're now in a completely new landscape in a very short space of time. And I think the strap line says it all. Impossible is now possible. Before January, February, I don't think anyone would have seriously given thought to a worldwide lockdown being a complete reality. It now is. So new thinking needs to be required, new approaches to risk, new approaches to operations. So what I thought I'd do here is just to outline from my point of view on the risk side of things, certain things that you need to factor into your risk assessments and your consideration of risk exposures going forward. So yeah, risk assessments and business models, you now need to take into account the impact of a sudden national lockdown, sudden border restrictions, localised quarantines. These are popping up. We've seen Barcelona over the weekend give serious consideration to locking down the city for a 14-day period. Social distancing, I think we all understand and realise is going to be here to stay for an indeterminate period, and that's not just with regards to your passengers, but also with regards to working in your premises as well. We're the same. We'll be going back to our London office in September, but probably only on a couple of days a week basis. So working from home will be a fact of our lives for some time to come. you're going to have supply shortages. Not all of your hotels will be running at 100% capacity, again, for some time to come. Same with your transportation providers as well. So your ability to book pre-COVID is not going to be the same, I think, going forward. Airlines, I think they're going to take a little while to ramp up to the capacity they had before. So that's going to be a consideration. And we can't also obviously ignore the impact on your staff, the mental well-being on your staff. Speaking purely from looking after my own staff members, we've all got used to a new way of working, a new reality. And I think there is, across the board, genuine fear to a greater or lesser degree about returning to public transport, returning to public environments. That needs to be managed. Obviously, everyone's been impacted financially. And obviously, many people will also have been sadly affected by loved ones catching the virus, and in obviously many cases, sadly, having to deal with deceased relatives. So there's an increased awareness of mental welfare of staff members, which employers obviously can't ignore. Infrastructure impact, I think, from my point of view, is going to be one of your biggest requirements going forward. Border closures, as I mentioned, and hotels, etc. But risk assessments are going to be key here. You obviously need to look at protecting yourselves going forward, and you will all, to a greater or lesser degree, be carrying out risk assessments and risk management programs, and those, by and large, will all be fantastic. Will have addressed the risks which you as companies and organisations have traditionally faced. These are new risks and new factors. So if we can pop over to the next slide, what I thought I'd do is to highlight some of the areas I think that you need to look at, certainly in terms of risk assessments and in protecting your business operations to the best of your ability going forward. So taking the risk assessments you have, you now need to pay specific attention to coronavirus and probably other pandemics which are obviously at this time unknown. So you need to be talking to your hotels and accommodation providers about what steps they're taking with regards to anti-COVID protections. So obviously, first thing to bear in mind is, are they complying with local regulations and local health and authority requirements? That's going to be key. You also need to be looking at provision of PPE for your staff members overseas. That certainly can't be ignored. You've got an obligation to your staff members to keep them safe whilst working for you. And that's going to be no different to people being on public transport in the UK. If you're sending staff members overseas, make sure they have the ability to protect themselves as much as possible. Face masks, visors if necessary, sanitisation. These are all previously outlandish suggestions, but these are now the reality of life that we're living in. So please bear that in mind. You can't govern too much PPE with passengers. That's going to be down to personal preference in many cases, but you can help your staff and you can protect your staff. Obviously, the downside of that is if you fail to provide adequate protection for your staff members, and they do suffer a virus as a result, you are opening yourself up to employers' liability risks. So that's to be borne in mind. Are your suppliers deep cleaning after every turnaround? It's a big job. It may mean that there's going to be later check-ins whilst they do a thorough clean and thorough sanitisation of premises. So factor that into your transportation arrangements, and obviously make sure everyone's aware. Social distancing, again, as I said, it's here to stay in the UK. It's also going to be very much prevalent in other destinations, Spain, Portugal, France. So is that going to restrict your passengers' ability to enjoy the hotels they're in? It may well be that you can't stand at the bar and get smashed anymore. You've got to sit down and book a table. Are you selling hotels where your passengers are going to be able to fully obtain the benefit of the services that you're offering as part of that sale? All things to bear in mind. So yeah, obviously lots of work there. If anyone needs any help, pointers in that, I've been more than happy to speak to individuals after the event and help you where I can, give you some pointers where possible. It's free of charge, but yeah, we're all in this together. We all need to look at things differently, and if I can give you guys any help, assistance on that, there are plenty of other companies out there who can also do the same thing for you. I urge you to take advice where you can, and if I can give any for you, fantastic. Other things to bear in mind: narrow geographical spreads of passenger destinations. Where we're looking now at potential sudden border closures or sudden localised lockdowns, if you can spread your destinations, fantastic. It gives you the opportunity to have less of an impact on bookings and certainly cancellations. I know how hard cancellations have hit you guys, and obviously that could potentially lessen the impact of those if they come up again. Always have a plan B. I think everyone now is in plan B. If you have passengers going to countries, or large numbers of passengers going to countries over the summer period, for example, do you have a fallback if that country goes into lockdown or looks like it's going to become an issue? Can you offer your passengers a swift alternative which is suitable? I think not having a plan B leaves you very exposed to large-scale cancellations, but if you can move people elsewhere very quickly, your passengers will respond to that, and I think your passengers will be grateful as a result. Robust supplier contracts, obviously a key thing that Travlaw can certainly help you with. We've seen so many situations where tour operators have been forced to provide refunds back to passengers without having the benefit of getting that money back from their suppliers. It's an age-old issue, an age-old problem, but whilst having robust supplier contracts isn't going to necessarily guarantee you're going to get that money back, it gives you a good chance to do that. So please make sure that any supplier contracts you have are certainly revised and updated with regards to the current landscape situation we're in, and if that can be give you a bit more protection, so much the better. I've mentioned staff welfare already. So there's lots of things to bear in mind for your staff, and new health and safety assessments will have to be carried out. The local authorities and the government in the UK will require you to do risk assessments before allowing your staff members back into the office. But the thing to bear in mind is consumer abuse. That's something that really takes its toll. And I think that's, when I say consumer abuse, it sounds horrific, but when customers are complaining about not getting what they want, or want their money back, it's if you can sort of shift that or spread that around your staff members to ensure that everyone's sort of taking a bit of a hit on that one, so much the better. Sorry, someone's trying to get in my house. Door's going. Sorry about that. Right, so yeah, staff welfare is obviously a key thing to bear in mind. I've also mentioned international infrastructure. So when planning for budgets going ahead, obviously as Mike touched upon earlier, you need to factor in what you're looking at in terms of availability locally, what your suppliers are doing, and what the transportation arrangements are like as well. So please bear that in mind. If we can move to the next step, please. So I thought I'd end my chat, because no one wants to hear from insurance people really in this sort of situation. It's a very tough market for everyone. But I thought I'd leave you with some positive thoughts from where I am. As mentioned earlier, Mike touched upon this. This is an unforeseen, unprecedented situation which has impacted everyone, the likes of which we haven't seen since probably the Second World War. And although, from my point of view, you guys have been one of the hardest industries hit, you're not alone. There's lots of people sharing your pain, ourselves included. We're certainly not been immune to suffering here, but it's something everyone is suffering. So I thought definitely with you guys. But what I've noticed is that in any crisis, the travel industry has always shone through. Whatever hurdles you've had to battle, you've always come through it, regardless of whether or not it's large-scale financial failures, tsunamis, that sort of thing. you've always come through, everyone's fought through it, and you've not just come through, you've shone and grown as a result. But appetite is definitely there for travel. I know I need a bloody holiday, and I'm sure you all do as well. So the minute borders start to open up, which they are doing now, people are going to want to book with you guys. So hang in there. I think everyone has adapted very differently, but very positively here. And with the hundreds and hundreds of clients we've got in this sector, we've seen lots of people take very sensible and proactive steps, which has to be applauded. I think what you guys have all done individually and collectively is to keep this industry going, in the face of what is a absolutely horrific situation. Well done. I think it's been awful for you, but I've seen some really, really positive steps taken and some fantastic attitudes. So from my point of view, I just wanted to congratulate is the wrong word, but applaud the steps you guys have taken. And I really hope that there's a real good boost for you guys with certainly late summer and hopefully winter holidays with the sun now coming into play for you. So that's all I want to say for today. New landscape, new things to look at in terms of risk management. But certainly, if there's anything we can do to help, I'll be delighted to see what we can do. So, thank you very much.
Thank you, Alan. And just as we pop up the next slide deck, Alan, you're wrong. People do want to listen to you and to kind of what insurers have to say. They certainly want to listen to good folk like Barclays and what they've got to say. Whether they want to hear what Travlaw has to say is another thing. But I'll tell you someone else who we want to hear from as well, and that is good accountants, which brings me nicely to Chris at White Hart. Chris.
Thank you very much, Matt. Banker followed by an insurance broker followed by an accountant. There's got to be a joke here somewhere. Biggest problem during lockdown is the Amazon deliveries that interrupt virtually every Zoom call. If we could just have a look at my only slide, which really just is an aid memoir for me to speak to you today. It just reflects there how the industry's issues seem to have come in waves in this 3 or 4 month period. I'm acting for a very sizable portfolio of travel clients, in excess of 200. It seems the same problems come along for the same clients at the same time. And I'm just going to take you a whistle-stop journey through the waves that our firm has seen. If you go back to March 2020, it seems a long time ago. I think the key issue for everybody at that time was all about cash retention. We saw the introduction of the various government support schemes. I won't tell you what they all are. We probably know what most of them are. And obviously the thorny issue of refund credit notes. ABTA played a significant role in that. I think they deserve to get an immense amount of credit. Saw ABTA really acting as a trade association, something that I think has become the third or fourth string to their bow after being a consumer champion, being a regulator. But ABTA really came to the fore here. Unfortunately, the government didn't see it the same way as the travel industry or as ABTA. They didn't change the PTRs to make refund credit notes something that was mandatory for a consumer to accept. Still, the consumer has the choice of a cash refund or accepting a voucher or a credit note. Unfortunately, many other states around the EU were a bit more protective of their travel industry than we've been in the UK. Goodness knows why it took the CA so long to come out with their guidance, which they eventually published last Friday. I think it's widely known by us professionals that the Air Travel Trust payment policy made it quite clear that a refund credit note would be covered by the ATOL scheme anyway, but moneyexpert.com, the various other watchdogs wanted it stated in black and white, which the CA has now done. One disappointing aspect of the guidance issued by the CA is that if a travel business issues a refund credit note, which is then used for a new booking, the CA want to be paid the APC again. That's somewhat disappointing. One of my clients that I spoke to yesterday described it as regulatory theft. So let's just clear up what it means. It means that if a customer comes along, has a cancelled booking, rebooks with you immediately, gets a revised ATOL certificate, well, there's no additional APC payable. But if you give them a refund credit note to hold on to, the CA considers the original booking to be cancelled, and that when that refund credit note is used for a new booking, that's a new booking, and at the cost of the tour operator, the ATOL protection charge needs to be paid again. We saw in March and April stakeholder knee-jerk reactions, merchant acquirers sending letters to their clients saying, give us £20 million security by close of business tomorrow. Not really impressed with the way that that was approached. It settled a little, but nevertheless, merchant acquiring is a key issue for travel businesses on an ongoing basis. Knee-jerk reactions for a number of insurance companies, particularly in the financial failure insurance realm and in the supplier failure cover realm, just withdrawing cover as a response to the changed marketplace. Suppliers, regulators, all of these clients and their professionals, travel companies and their professionals have had to push back on and had to assist on. We then went to the 28th of April 2020, the deferred March 2020 ATOL renewals. CA backlogged most of the larger licence holders to issuing renewal offer letters virtually on the last day. That's pretty disappointing, really. Didn't give the travel industry as a whole an opportunity to push back or anything, or to get in any negotiation dialogue with the CAA. And broadly, I expect more of the same in September, unfortunately. Then we moved into May, perhaps going through to date, see travel businesses in urgent need of money, funding cash, and now they got used to the situation, looked at their models, looked at their booking profiles, looked forward, seen what COVID-19 impact was looking like for forward bookings, and they then went to source bounce back loans, CBILS, CLIBILS, and Mike has indicated a lot of information for us in that particular area. That got off to a bit of a slow start. I think banks didn't have their internal processes ready after the Chancellor had made these announcements, and that's not unreasonable. A lot of the government announcements have had a flood of businesses asking professional advisors what it means when we've had very little data to go on. But that's kind of settled down now, and our impression is that banks have been processing these pretty damn quickly. And now we come to the next roadblock for travel businesses. ATOL Standard Term 4.9 says that if you change your debt structures, you have to get CA clearance on those structures and the debt documentation. I had dialogue with the joint heads of ATOL back in March and said your teams need to be geared to do these quickly. Michael Budge and Rainer Kramer gave me assurances they would. I'm not sure that's really filtered through, unfortunately. It's clear that the CA's internal resource for this type of thing is stretched, particularly if you're asking for clearance for smaller loans with a smaller team. They really don't have the expertise to deal with it. There's a totally inadequate in-house legal team at the CAA. So what the CAA has been doing is outsourcing a lot of the legal work on getting these clearances to city law firms. We've had mixed experiences there. Some of the questions and points being raised by these firms have frankly been laughable, but hopefully this will get resolved. What about looking forward? Well, 31st of July is going to be a big deadline for a lot of travel companies. A lot of them that perhaps issue refund credit notes with a redemption date of the 31st of July are now considering the deadline of cash impact there. Unfortunately, we have seen in recent weeks mounting failures. I think the problem with those failures has been the fact that they have been from very long established businesses, cruise and maritime, shearings, Fleetway Travel, Jakarta Travel. These are long established businesses, they're not new businesses. And regrettably, they're not likely to be the only failures. Certainly, a refund credit note deadline could result in additional failures, excuse me. And the next big watershed that travel businesses are going to face is the 30th of September and having to renew their ABTA non-licensable tour operating activities bond and having to deal with their ATOL renewals. I think there's been some clearer guidance coming through from ABTA in relation to their approach. I think bonding is going to be a hugely difficult area for businesses. I think generally speaking, if you have the support of an existing bond insurer who wants to remain in the market, then if you're renewing bonds at existing levels or lower levels, you shouldn't have any difficulty. If you're trying to reposition bonds from bonders that have moved out of the market, you're going to find it extremely difficult. How CA are going to approach these renewals, there's still a degree of uncertainty. That will become clearer in the weeks ahead. So that's my whistle-stop view of the waves of issues that the industry has had to face to this point in time.
Lovely. Thank you very much, Chris. I mean, that's a fantastic half an hour or so from our three amazing panelists with so much to get into. And we've had a lot of questions submitted beforehand, and we've seen some coming in now. So we'll dive straight into those. It's hard to know where to start because there's so many topics to go into. So we will just get into it and see how we go. Let me start with Alan. One of the things that we've seen here certainly has been, and everyone in the industry will have seen this, is the tension between the travel industry and consumers and personal travel insurance for things like covering refunds and claims and whatnot. Now, let me be the first to say that, you know, you, Alan, and travel risk professionals, etc., that's not what you do. You assist the travel businesses in other ways. So this is not pointed at you, but you have the closest connection, I think, to the wider travel industry. These are the circles that you also move in. Just give us an insight. What's happened to insurance here? How are they seeing all of this?
So we're talking sort of travel insurers here.
Yeah,
and
in particular, the world of personal travel insurance, but also the kind of wider world of insurance. Because as you said, they've been hit as well. And you know, we have our own thoughts on that, but you know, we can't discount that as well. So what is it looking like from their point of view?
It's a tricky situation. I mean, if you take insurance generally, most insurance policies out there, regardless of whether or not it's a household policy or a liability policy, all insurance is normally born out of reacting to an event which has hitherto not happened before. So the crisis we're currently facing has never happened. No one could have predicted it, and as a result, there were very few specific insurance policies commercially available on the market to tour operators, for example, which would have been of any real assistance here. Yeah, now that this situation has happened, obviously a lot of people need to come together here to look for a solution going forward. But yeah, it's not been easy. Yeah, lots of people have suffered interruptions to their business as a result of government closure. Business interruption, by and large, hasn't responded to those claims. I can't speak specifically for individual insurers, but the problem with that is that business interruption cover typically and traditionally responds to insured perils occurring at your office premises, and obviously very few situations have occurred where there's actually been an occurrence of COVID at an office premises resulting in closure. So there's been lots of toing and froing. The FCA, for example, are going through a test case at the moment with various insurers, not ourselves. and it remains to be seen what comes out of that. So it's difficult. Travel insurers, some have definitely responded very, very well. We don't do a lot of travel insurance, for example, but I won't mention any individual insurers because it wouldn't be fair, but a couple of insurers we used have paid out lots and lots of money in cancellations as a result of COVID, and that's to their credit. It's obviously going to hit them hard, so what that remains to be seen in the future picture for these guys depends on what the ultimate impact has been in terms of a claim. So yeah, there will be some changes in the market. I think that has to happen. It's just going to be a process where everyone has to analyse what the impact individually for each company has been and what their appetite is going forward, because they're not just being hit on the travel side. Insurers have been hit on multiple areas, general liability and other areas as well. So it's going to be a challenging market, but we're constantly looking for solutions. I know a couple of our peers have come out with some really good looking travel products at the moment as well. I will mention Rock Insurance here. They come up with a couple of good products lately, which I've been looking at, and I think it's timely and is good for the travel sector in general. So I'm hoping that'll be the spur to other products coming in.
Okay, thanks, Alan. Mike, we've had a question which I think probably sits well with you. Here's the question. Whilst everybody needs a holiday, consumer confidence is low, and the industry is nowhere back near where it needs to be. Lots of companies are going under and making. How is the industry going to recover when businesses are being run on a shoestring? I think this is largely kind of obviously businesses are struggling. So how do you see it in terms of the industry recovering from this when right now it hasn't got much to work with?
Yeah, and I think that's part of the problem. As I said at the beginning, we see a lot of businesses fail on the upswing from a recession. I mean, just take one simple comment that was made to us yesterday in terms of the cinema market. I mean, the cinema goers, there are something like 25% of regular cinema goers are not going to go back to the cinema until a vaccine's been invented. So you've got this natural caution anyway. So in terms of the travel sector and leisure more generally, it is discretionary spend. So unless there is some work done to try and give it the positive spin and build up confidence, simple things like airlines talking about the air filtration system and some of the clinical way in which they can deal with that environment whilst you're in close proximity, or the transfers to destination. There's a lot of kind of comments that is really just speculation as opposed to fact. So to the extent that positive messages can be sent to build up that confirmation, social media is a great way these days of targeted marketing and focusing on particular aspects. I do think at the moment we need to concentrate on what we can concentrate on. So the short haul is much more likely to see that bigger recovery, and certainly some of the long haul, we're really looking into the end of 2021 or mid 21 onwards. So to the extent that there are markets that are easier to travel to, and can we send out positive messages, there are a number of people that do want holidays. There is a big employment risk that's going on. Furlough is starting to unfold. So then you're playing to this confidence factor of will people want to spend the money on a break or a short break? So it is about getting consumer confidence back. Certainly some of the stats that we try to put out is to send that positive message, and where there are new ideas. So Alan was just talking about Rock Insurance. I mean, if there are new products out there that will help with consumer confidence, any of them, then I think everybody should be encouraged to pull together and share that information. Certainly the UK government are very keen to share data within the UK staycation and inbound market. Why couldn't firms work more closely to share good practice to help promulgate positive responses from consumers? So I haven't got a specific answer other than it is a confidence building exercise.
Okay, thanks, Mike. Okay, we'll dot around on the questions. This is a fascinating question that's come in. This is one for you, Chris, based upon something you said. Now, I was certainly aware of the CAA outsourcing some things. However, questions come in. If the CAA in the outsourcing practice that you mentioned, so they get a city law firm in to do this work, we are hearing that the operators in question, or the travel businesses in question, are being asked to foot the bill for said city law firm's work. Is that something you've come across? Is that right, wrong?
No, absolutely. You are expected to pay for that law firm's work. It's in the CA scheme of charges. Bizarrely, they're permitted by those scheme of charges to pass on up to £100,000 worth of third-party professional fees if they deem it something that is needed. That was up from 85,000 in their scheme of charges in 2019, so a bit more than a retail price index increase. Additionally, the CA is also allowed to charge for its internal resource time at £184 per hour, up to £100,000. I think those things were slid through the back door by the CA and the scheme of charges a few years ago. Not sure what ABS and the other trade associations were doing when that happened, but so have we.
Okay. And I'll stick with you, Chris, actually. You mentioned activity as well from banks and merchant acquirers in terms of additional requests for additional security on various fronts, particularly with regards to the merchant accounts. What's your general advice to businesses if they receive that kind of approach now, whether they've already had it and are still dealing with it or they get it in the future?
Well, the first response would be to alert the bank and the merchant acquirers to the fact that the business is a regulated entity in relation to an ATOL. ATOL standard terms 4.7 and 4.9 mean that those companies have to go to the CAA to get those arrangements approved. So that's the first thing. You're saying to the bank or to the merchant acquirer, look, we can't do this of our own volition. We need to get regulatory approval. And depending upon what is being proposed, the CA may push back. So there's a variety of types of security that they don't like. And the CAA view merchant acquirers as fair game under Section 75. If there is a failure of a travel business, they refer anybody that's been paid by a credit card back to the merchant acquirer. Therefore, if the merchant acquirer is trying to secure its Section 75 exposure, the CAA just will not let that happen. Their response will be, well, if you can offer an arrangement that benefits us as well as the merchant acquirer, we'll consider it. So if you set up a CAA-approved trust account, which will give protection to an acquirer and to the CA, that's fine. But we won't allow you to set up a Section 75 merchant acquirer trust account or other form of security.
Yeah. Okay, good stuff. Thank you, Chris. Alan, you mentioned all kinds of things for travel businesses to consider going forward, kind of with insurance and risk management in mind. If there's one thing that you think travel businesses can learn from this, or one thing that they could do going forward, what would that be?
Well, that's a tricky one. And I'm not entirely sure the best answer there. There's lots of things they need to think about going forward. As I've talked about expanding risk management. But I think probably the key thing is here, obviously I appreciate everyone's got a bottom line. Insurance spend is never popular, and I totally understand that. It doesn't generate you any revenue. It's just a drain on finance. But I think try to look at getting as much protection as you can. As I said before, the impossible is now possible. The appetite for buying, shall we say, what is considered non-essential insurances generally. So everyone has to buy financial failure to a degree. Everyone has to purchase liability or indemnity cover to a degree. I think, if anything, what this crisis has highlighted is that risk exposures are out there in many forms: cyber, directors and officers liability, travel disruption, or there's all sorts of things here. So please give those as much thought as you can. The take-up rate for, and I'm sure some of my peers, I've seen Tony Gilpin on the panel, I'm sure he'll agree with me as well. The take-up rate for non-essential, what is viewed as non-essential insurances, such as directors and officers liability or cyber to a great degree is not that great, but it is a risk. Do consider it if you can, because it's worth its weight in gold if a crisis situation happens. So yeah, just aware, everyone should be more aware that the impossible is now possible, and that we are in a new landscape. So yeah, just other than that, risk assessments, get them done, and make sure they're as up to date as they possibly can be.
Yeah. Mike, you mentioned a number of interesting points in your slot. Two of the things that jumped out at me, which I'd never really kind of given that too much thought to, was you mentioned, I mean, there's been a lot of talk about the different, you know, if you can draw the recovery, and there will be a recovery on a graph, what it would look like. Is it going to be V-shaped? Is it going to be W-shaped? Is it going to look like someone's expansive kind of signature going loads of loops and whatnot? You mentioned the reverse tick as a potential kind of plotting on a graph type thing. And you also mentioned vaccine, and how actually, if that came tomorrow, that might not be the best bit of timing in the world. So maybe could you just expand on those points? Kind of like, let's say the vaccine did come tomorrow. How is that going to potentially look for travel businesses? Because it sounds like a good thing.
No, it does, and then it kind of goes back to the availability of limits for either trust accounts or straight card acquiring limits. There is a general pressure in the market, and there is not that much supply. I mean, as Chris mentioned, if you are looking to try and switch acquirers or banks at the moment, it isn't a good time to try and do that either, because until the businesses have got regular trading patterns re-established, it makes it very difficult for someone to take that new to bank risk or new to card acquiring type risk. So the vaccine point was really made that if there is this explosive return because of this confidence factor, I think that there would be a struggle under current finance limits and operating limits that many businesses have got. It may well be that there is a move towards making more headroom available, but at the moment that just isn't the outlook that is being offered. So it's a bit of a double dilemma, because on the one hand you've got this demand that you need to satisfy, but you might not be able to get the trading limits that you need to be able to satisfy it. So I think one of the things that's come out of this crisis is that when businesses are working with really slim margins and they're using those client deposits, which is the model within travel typically, and they're using those monies on their balance sheet to fund the business, the running of the business, it makes it very skinny when it comes to client liabilities when you get a stop situation with the trading of the business. So maybe there is a move towards CAA approved trust situations. Maybe there's a middle ground to move to identifying client funds separately, in the same way that you would on the gaming sector. You look at client deposits as a separate number, and you have to maintain a margin of safety around the liquidity that you got within your business. It is less rigorous in that way in travel. Obviously, some of the smaller operators would go with a trust account type situation, but equally, just to be able to identify easily the amount of client deposits that you've got, that does help run the business in a safer way. So that recovery shape could take a number of different guises according to the territories, the type of business it is. I do think that the break-even analysis that businesses are doing as they change their cost structures, remove some of the high street presence, changes in staffing, adoption of IT, I do think there's a lot more change to come. So we want to try and help bring IT to it. We do have some metrics that allow us to look at consumer spending trends. And if you can market to a customer who is a known traveller and who's likely to do repeat business, it will cost you less to acquire a new customer that way than just going out on a blanket marketing campaign. So I do think there is some science to apply here, Matt, as well, in terms of, you know, those broader recovery shapes and that vaccine point.
Okay. And on a similar theme, and we don't shy away from hard questions here. Tony Gilpin from Target got name checked a minute ago, so let's name check him again. He's asked a question. He says, with trust accounts, and I'll throw this open to all three of you. With trust accounts potentially being the only backstop should bonding or financial failure insurance not be available, are ABTA re-evaluating their acceptance of trust accounts for non-licensable turnover for members? Any takers?
Probably one for me, unless the other guys want to answer it.
Feel free, Chris.
No is the answer. as you may be aware, ABSA do not recognise trusts as an acceptable method of protecting non-licensable packages. I spoke to John de Vial, Head of Consumer Protection at ABSA, about this 6 weeks ago and said, "Are you having a rethink?" And John's reaction was immediately no, but we may have a rethink as part of a greater overview of rebalancing rebalancing the whole consumer protection piece, which is probably months, or certainly probably years down the line. So the answer is no, but maybe in the longer term future.
Okay, Mike or Alan, anything particular to add on that general theme?
No, it's not really my ball, but yeah, what Chris said, it seems to make perfect sense to me. I certainly couldn't add anything further to that.
Okay, Mike?
Agree. No, yeah. As I say, that's probably Chris's domain, and let's see what evolves, but no, nothing more to add.
Okay, well, in which case, we're nearly up to the hour, and we've had lots of questions. I think we've more or less covered all the ones that have been submitted in one theme or another. If we haven't addressed your question, then apologies. We'll try to pick up the many that have been submitted in chat. A lot of them were variations on a theme. So we'll try to pick up any that haven't been answered and try to get back to the individual if we can. But that will just leave me to do the wrap up and to say thank you everybody for coming. We had a heck of a lot of people signing up and a heck of a lot of people attending this morning and giving up their time for this, for which we really do thank you for coming along. And thank you in particular for the time and expertise of Mike Saul at Barclays, Chris Photi at Hart Associates, and Alan Pattison at Travel Risk Professionals. I'm sure you've enjoyed and had some real good insights in terms of what they've said and what's been discussed. So thank you all. And that said, safe travels to everybody. All the best. Thank you for coming.